This event, when it occurs, right, warrants a risk it all. In fact, if you can borrow money, do it with this. All right? Now, that's very rare for a so-called professional to tell you risk it all, but it is intelligent to risk everything you have at times. In fact, it's the opposite of intelligence if you do not risk all at certain times, because think of what a professional poker player does. All right, play small, but when the odds stack, all in. The pros know when to go all in. You will forever be a mediocre trader if you do not occasionally risk it all, and certainly if you do not know when you should risk it all. You're in big trouble. All right? So here's one event. We call it the Bull Twin Tower. I have a variety of names for it. Some of my traders have known me to call it the Bull 180 or the Bull Twin Tower. All right? The criteria is easy. You first have a giant, fat, long, solid, red bearish bar. This bar dropped huge. Let's say it opened at $20 and dropped to $17. I mean, it's a long, fat, solid drop from open to close. All right? Now, you can have a little tail at the top. You can have a little tail at the bottom. I've drawn it perfectly, but there can be a little tail on each side. I'm just talking about the red part is fat and long. All right? And what's followed, what happens is something odd. What happens next is that there's a 180-degree reversal. There was absolutely zero follow-through to the downside on the following day or the following bar. This works intraday as well. If this is a 15-minute time frame, we dropped hard during one 15-minute period, and we recouped everything in the next 15-minute period. 180-degree reversal, no follow-through. But wait a minute. The third part of this is that the green bar is taller than the red one. Wow. So if we're measuring, if each bar represents the footprint of an elephant, which elephant is bigger and more powerful? The bull elephant. And so when you have a giant elephant red bar followed immediately by an even bigger bull bar, this is your turning point. And I'll tell you exactly what's happened. Imagine a stock that has been dropping. And then after dropping for a number of days, this day, it just really falls out of bed. Imagine the holders of the stock. What are they experiencing on this bar? They were already experiencing pain. This is death. And most of them did what? Got out. That's why the bar's so big. And as soon as the majority left, what happened? There was complete reversal. All the sellers are gone. If the sellers are gone, even a small amount of buying rockets the stock. All right? And so what my traders are taught to do is they buy into this green bar above the high of the red one. So once the green bar surpasses the high of the red bar, they buy. They do not wait for this bar to finish trading. They buy into the bar while it's still going up and down like this, as long as it's higher than that bar's high at the time of their buy. Do you follow this? Once they're in, they put a protective stop under the lows of the two bars. All right? Protective stop, hard stop, under the two-bar low. And then I tell them, turn the machine off. You are the problem now. Go watch Oprah, do whatever you do. Just go somewhere, do something. Take your dog for a walk. I do not want you tampering with this. I have found that when this dual you got twin towering bars, but one is higher than the other. The green one's higher than the other. When you have this scenario, that is the low forever. Now, of course, that's not true, but it's almost true. All right? I lie to my traders. I do lie to. Listen, my job is not to help you find the truth. It's to help you find money. And if I've got to lie to you to do it, like we do with children, right? Don't open that closet. There's a monster in there. All right? I'm going to lie to you the same way. All right? And I will tell you that, I would tell my traders, when you see this 2-bar, I want you to buy it, put a stop under the low. I want you to turn the machine off and come back next week. It's the low forever. Don't worry about it. All right? I want them to be so confident. But on this pattern, I want them to take everything they have left in their account and put it into the stock right there. Everything. Now, when they first try it, they get a little nervous with it. And I said, but don't be nervous. Remember, you're really not risking everything because of your stop. It's not like you're going to let this go to zero. That's really risking everything. You're really risking everything from this point to that point. That's all. All right? The beautiful thing about this strategy is that your only loss, when the rare one happens, you will lose 1 bar. You see this? I buy here. If I lose, I get stopped out here. You lost 1 bar. But when you win, you'll win 33 bars, 45 bars, 28 bars, 14 bars. Every time you lose, every now and then, 1 bar. You see, I just don't want you to lose 35 bars. Lose 1 bar. Do you imagine isn't this a novel idea? I will never lose more than 1 bar. Ever. If I buy this bar, my stop's under that, I will never lose more than 1 bar. I guarantee you start seeing different results. 1 bar loss theory. All right? Think about it. So here, the bear one is just the opposite. It's a giant, fat, elongated green bull elephant bar followed immediately by an even longer, fatter, taller, thicker red bar. And if we're shorting this, my traders are taught to short under the low of the green with a stop there. Now remember, this bar, everybody was high-fiving each other. Yeah, we're winning, we're making money. Whoa, look at that one. Wow. Boom. Now everyone who bought into this bar, and you know a lot of people bought into that bar, otherwise how could it be so big? Right? Everyone who bought, more people bought on this bar than all of these bars. So everybody at this point who bought on this bar is what? A big fat what? Loser. Everyone who bought on this bar is low. See, the people who bought at the low, the people who bought at the high are immediate losers once there's just a little bit of red. Then as this red grows, the people who bought, it increases the number of losers, right? Now more people. See, the people who bought in the beginning of that green bar, they're not losers yet up here. But as this red grows, the pot of losers grows and grows and grows and grows, which means that the more people that move into negative territory, the more people are potentially what? Sellers. And this is what causes the stock to collapse. The stock is collecting losers. Once it breaks the low, everybody and most of the people are inside of that bar. If I was a cartoonist, I would draw it like a fish tank, and everybody's crammed into that bar with their face up against the window. All right? And so we crack the bottom of the fish tank, and then everybody falls out. So we short here, we put a stop there. Now as this moves down, now all the people here are losers. And as it moves down further, these are losers. And it just creates an avalanche all the way to the downside. And think of it, these people want to protect their gains. So they're rushing to this side of the equation. While you're pressing it down, like get down, you're shorting it, they're joining you to sell to protect their profits. And that's what creates the collapse. Does this make sense? When you think of market play in terms of people and their emotions, now you're thinking right. When you think in terms of the BS out there that everybody wants you to think about, like, well, what's the PE ratio of the stock? What? This stuff doesn't mean anything. It's the smokescreen part of the equation. All right? To keep you off it's all about buying and selling and who's doing it. That's it. Why they're doing it, who cares? One's doing it because he believes in the PE ratio. Another one's doing it because he heard some tip. Another one's doing it because his analyst came up with, a 3-hour report. Or whatever the reason, who cares? It's just, if you can monitor it, put your finger on the pulse, this is the big boys getting out. This footprint is bigger than all the footprints. All right? Now, let's take a look at this. I want you to take a look at this section of it. Look at what the stock was doing. It was dropping, producing pain. And all of a sudden, one of the biggest red bars in a long time was right here. Boom! Look how solid it is. It's full from high to low. It's got a tiny wick on each side. That's fine. But the red is solid. And it's immediately followed by an even more powerful, fat, long green bar that takes out the high. This stock was dropping from here. Drop, drop, drop. And one of the biggest red bars cleaned out the last of the Mohicans. Followed immediately by a reversal. You buy everything you have right there with a stop under the green bar's low or the red bar's low. I tend to go under the whole pattern. But some traders just like to go right under that green bar's low, which is acceptable as well. All right? And then your job, once you buy with your hard stops in, so you're risking everything in your account, but really only this is your risk. But so you're risking half a bar for all of these bars. I'll take that risk any day of the week, any minute of the day. So this is like if you get rarely stopped out, you fall on one knee. I just don't want you falling from here. All right? And so you let the trade rally. Now, my traders are taught that if you don't do everything, you must add to the play once it starts winning. And we add based on a tactic called this single RBI tactic, the red bar ignored. I'm looking for a single red bar all by its lonesome that gets its high taken out. And I'll show you a clear one of those later.